question is, what are stop loss limits? How do you define them? How do you use them? So a stop loss is when you kind of draw a line in the sand and you decide that no matter what happens, if a stock drops below a certain level, if you own a stock, meaning not shorting a stock, if a stock drops below a certain level, you're going to sell it no matter what. And I pride myself, and I teach about this a lot, on investing based on fundamentals first, valuation second, and then a distant third is technicals. But some people love to invest in technicals, especially shorter term hedge fund oriented companies. And what happens is, let's say that a stock has, and let me just use a real example. I'm going to make up a ticker from scratch here. Let's go to Yahoo Finance together, okay? And I'm going to pull up any random ticker. It used to be Agilent. It is still Agilent. Good. Okay. All right. So if we were to pull up a chart, okay, for Agilent, and I'm going to completely make this up, okay? And if you see down here, right here, there's an invisible line we can draw that is like a support line here. See? And some people, if you're a trader, might think, well, if it breaks that support line, then I should sell the stocks. It's going to go a lot lower. Okay. So for example, here it didn't break the support line. It didn't break it here, didn't here. And I know it's ridiculous, but it's self-fulfilling sometimes. It becomes relevant because some traders look at it this way. And you'll see here, and of course you need more than one data point because one data point doesn't make a trend. But there's multiple data points here, and this stock has not broken this level. Okay, this line here, for example. If right here it pulled down to here, say to $59, then you might have some people kind of having a stop loss and drawing a line in the sand at $59, saying, oh, it definitely broke the support level, so that's a stop loss, and I will sell the position or trim position or take profits on the position. But in general, again, I have to reiterate that you've got to be a fundamental investor first, valuation based second, and then technical oriented, if at all, a distant third, because I promise you will get fooled by randomness and lose your shirt if you become a day trader. And I don't know the name of any successful day trader in the long run because they don't exist. They don't exist. And what happens is within 1 month, there's 20 weekdays and 20 trading days. And we have no idea what's going to happen, for example, to the price of oil, given geopolitical events, which impacts all major markets. We have no idea. And so we might be wrong for the wrong reasons or right for the wrong reasons, whatever it is. And the worst thing that can happen is you make a little bit of money trading and you first start out, and then you get overconfident. It's like going to the casino and then you just kind of bet it all on black or red or whatever it is in that roulette wheel. You're playing with fire. It is Russian roulette, being a day trader. It really, really is. And so please don't just look at stop losses, like I explained, or technicals analysis as the basis for your investing framework. Think longer term. And the last thing I'll say in that is we talked about stop losses with that invisible support line for that ticker A Agilent being $59. People also use stop losses with the 50 moving day average, the 200-day moving average as well. And those are for longs. And if you're short a stock, it's the opposite. And I do believe in stop losses with shorts, by the way, because if you're short a stock, which means you're betting against it, you can lose an unlimited amount of money if it goes up forever to infinity, hypothetically speaking. And so usually, and when I have shorts on in the past, at least when I ran my hedge fund and worked at other hedge funds, I would always have many smaller position shorts because I was worried that the amount of money you could lose is unlimited, versus my long positions where they were a little bit bigger, a little bit more concentrated. But I would have a line in the sands and stop out or stop loss some of my shorts if they are up more than, say, 10 or 15% or so.